Hi everyone, welcome to another episode. My name's Dom Warner. Today we're going to talk about Tesla's Q4 earning results, which just came out today, and I have to admit, I'm a little bit surprised. The company earned 15.97 billion in revenue in the third quarter, which was an increase of 71% over the same period of last year. Now, the revenue from energy consumption, though, did decrease by roughly 8%, which was below sort of most analysts' predictions. That division also experienced its lowest revenue since the first quarter of 2021. Tesla also said that its net income was 2.32 billion, which was up from 760%, and its gross margin was up gross margin was 27.4%, which is up from 26.6%, so they've increased margins, have done really well right there. Our own factories have been running below capacity for several quarters as supply chain became the main limiting factor, which is likely to continue through 2022, the company said in their shareholder deck that they released. We will not be introducing any new vehicle models this year. We will still be parts constrained, Elon said, and the company would then instead concentrate on engineering and tooling for future vehicles. So I read that as they're going to focus on increasing the margins on their vehicles and increasing profitability, and by becoming more efficient. Contrary to what Elon said during his Battery Day presentation in 2020, Tesla made it pretty clear that they're not working on a $25,000 compact electric car, which I think makes sense with supply chain issues. Things are a little bit behind, and not a little bit behind Elon's predictions, but a little bit behind pretty much the whole company's major plans. But they're still beating analyst predictions, which is good. But analysts are also countering in those supply chain restrictions. Now, a tweet from Elon last November mentioned supply chain issues. Basically, he said something along the lines of like, "Oh man, supply chain has been a complete nightmare this year," and that he would provide a roadmap on the next earnings call, which is this earnings call. Now, in late 2021, after overcoming those challenges, Tesla produced many cars in Austin and Berlin. In Texas, they're building the Model Ys with the structural batteries and the 4680 cells. And he said that they will start delivering after final certification of the vehicles, which should be fairly soon. Earlier this year, Tesla also noted a record production at its Fremont factory, which is the first factory that they ever had running. In the coming years, they believe the facility will be able to produce more than 600,000 cars per year, which is great. It also emerged during Tesla's shareholder deck that they had increased their FSD beta to roughly around 60,000 people in the US now. Full self-driving software remains one of their primary focuses. The company also wrote that over time, our software-related profit should accelerate our overall profitability, which totally makes sense because they charge $10,000 for FSD now, which is quite expensive. Although I do believe with the robo-taxis and things like that in the future, the price point will start to make more sense as time goes on. Federal vehicle safety regulators, the NHTSA and the California DMV, are both investigating Tesla's use of public roads to test the FSD beta, and they're also the DMV investigators are also looking into the use of the term full self-driving, which it calls its package or describes its premium driver assistance features. So that'll be interesting to see what comes of that as well. They've been dipping in and out of investigations. It's hard to tell what they're actually seriously looking into and what they're not. So this was a really quick video, but I just wanted to get an update out there. Really hope you enjoyed the video, guys. Thanks for watching. Catch you next time.